Hello and welcome to Pro Trader Strategies market commentary for June the 21st, a Thursday. Yes, I did miss Wednesday, June 20th's market commentary, but we'll talk about yesterday's here in a minute. But anyway, let me first talk about, my name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. And please do your own homework. Past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's talk about some economic data coming out yesterday. We missed talking about existing home sales. Came in a little bit lower than expected at 5.43 million units, expected to be 5.52 million units. That being lower than expected is a little bit alarming in the sense that we just saw that new home building starts ramped up a little bit. We saw building permits come off, but the new homes building ramping up, and now we're seeing existing home sales lagging a little bit. That could be a bit of a concern going forward. All right, let's talk about crude oil inventories from yesterday. Came in at a build of 5.9 million barrels, expected to be a drawdown of 2.1 million barrels. So a lot bigger drawdown than expected. Crude oil didn't really react a whole lot based on that economic data point, but still trying to stay in the game, if you will, and not have another breakdown, I guess. Let's talk about today's economic data. Really across the pond, all we got was Great Britain's monetary policy summary. And official bank rate came in line with expectations. Then back here in the United States, we got Philly Fed manufacturing coming off a little bit at 19.9, expected to be 28.9. We also got unemployment claims coming in at 218,000, expected to be 220, so in line with expectations there. Consumer confidence came in at a negative 0.1 for Europe. It was expected to be unchanged. And then finally, we got the natural gas storage is coming in at 91 billion cubic feet, expected to be 85 billion cubic feet, and that's about it for the economic data for the most part. Let's talk about the overall markets. We've got crude oil slightly in negative territory, unchanged for the most part, right there at the point of control. So in between these two Fibonacci levels, this 38.2 and the 23.6, that is really surrounding this point of control. So we could easily see this bouncing back and forth for at least a week or so while it builds in and gets comfortable again before we get any kind of movement. It's going to take some big moves in the equities and things of that nature, I think, in order to get crude oil really going. Maybe some really good economic data or something like that. Gold futures testing the limits of the value area here. The point of control is just slightly above it. We've gone down and started getting a little bit drawn out. So with this doji, the way it looks right now, I'm going to be looking to play this to the upside. We'll talk about that when we talk about my trades. But anything below this 1260 area, that's where I'm going to be looking to get out if we break below this, because I'm doing this as a chart setup. Looks like we're getting a little bit of a bottom here. I think we're going to pierce back up. So I'll talk about that trade in a minute, but based on this chart, that's what I'm thinking for gold to the upside. Bitcoin off just by a few dollars, unchanged for the most part. Still believe that it's got to go down and test that 58.80 area. It's kind of building a nice little bottom here, but I think we're going to get one more downturn before we can resume any upside potential. We got bonds slightly higher today, but mostly that's a product of the equities being lower, and that's causing the VIX, as you can see here, to spike a little bit. It was just in the 14 handle a second ago, back into the 13 handle, but up nicely today. Based on the equities coming off, we got the Dow Jones Industrial Average off by about 150 points right now, below the 50-day moving average, but that 50-day moving average is lining up with the point of control where the most time and volume has been spent. So that is a comfort zone for equities. So across the board, we're seeing a lot of these equities, a lot of the futures for the most part, kind of pinning right there where the point of control is, which could indicate that we are going to settle down for the next week or so. We got the NASDAQ pushing up. Actually, something to note, I want to remember to talk about is the ETF for the technology sector is back in and has been back in this trend channel. I just noticed this morning that we have gotten back in there. So that is something for the NASDAQ to catch up, because the rest of the broader tech sector is back into that trend channel. Then we look at the E-mini S&Ps coming off by about 20 or 12 points right now. But again, feels very unchanged, quiet day. Overnight inventory got very long and then flushed out coming into the day session. As you can see here, we're getting a little bit of a bounce coming in right now, but a half back, if you will. That being said, we're just trying to press out some of that long inventory during the day session, it feels like right now anyway. I want to talk about Amazon, because Amazon has some news coming out about it, that the Supreme Court has ruled that state level can start making its residents or citizens of that state pay state tax on products from Amazon, Etsy, and all of those online retailers. So they're all pretty much, or Etsy, I should say, are all getting hurt this morning because of that new ruling. I think it's actually a good thing, especially for the state level. I don't understand why, and I never understood why Amazon could get around that or skirt that. I think that the citizens in that state should have to pay their state taxes. That's just part of taxation, right? So Amazon is being hurt a little bit, albeit it is well off its lows. It was down 1% and over $16 down per got about half of that back as of right now. All right, let's talk about the trades that I've done. GLD doesn't look like as good of a setup as we saw there in the futures for gold. But remember, the gold futures are trading overnight 24 hours, so we get a nice little doji there. That being said, we're not seeing that show up in GLD because it's traded during open markets. So that doji doesn't look nearly as good as the other one. But having said that, based on that other chart, I'm going to look to play GLD to the upside. So in my IRA, I did it as one of those synthetic naked strategies and went in and sold the July 118 puts and then defined that risk by buying the 111 puts for a total of 47-cent credit in my IRA. That, like I said, that 5-cent strike that I bought is only to skirt the rules of the governing bodies, if you will. And then over in my margin account, I went in and sold those same July 118 puts in there for a total of 52 cents. So outright in my IRA or in my margin, and a synthetic outright naked short in my IRA. That's what I should have said originally. Today's market commentary brought to you by the Wolfman and his marbles in his mouth, I guess. No, today is going to be a great day because we're going to be talking about how to do more advanced strategies for the options trader. We've kind of slowly increased our risk and our reward, in a sense, our probabilities of success. Now we're in the very highest probabilities of success, but albeit that carries some risk with it. We're going to talk about all the benefits of that in today's webinar on the short straddle. So check that out. Go to protraderstrategies.com. And if you missed the live trader talk, reach out to us. We can get that video sent to you as well. All right. It's a really great webinar on basic fundamentals of the options montage. All right, so check that out. And if you can't take that, take it easy.